Welcome back. 24,340 now on the Nifty, almost at Friday's high. So good going for the benchmark index. 300 points higher now. The Sensex is also up 1,050. And of course, it is Reliance Industries that is leading from the front now, 5% higher on the stock. But IGL is the next management on the show after a healthy fourth quarter. Higher APM allocations from January till March has boosted results. To discuss more on this, we're being joined by Mr. Kamal Kishore Chatiwal, who's the managing director of the company. Mr. Chatiwal, good afternoon. Thank you so much for joining in. Now, it seems that there was a one-off in the EBITDA during the quarter. Could you talk about that first, sir?
Yes, there was a one-off, the contingent liabilities that we have provisioned in the books, around 114 crores, towards the trade margin payable to OMCs. So that has been reversed since the issue has been settled with the OMCs. That is a one-off reversal of liability.
Well, that. And what about the reported EBITDA per SCM? That's coming at 6 rupees as well, which was much higher than estimates. So if we factor in that one-off, what would be the EBITDA per SCM, the revised one?
If we exclude that, then it would be around 4.42 SCM. EBITDA per SCM would be around 4.42, and inclusive that is around 6.03.
Mr. Chatiwal, the earlier guidance for your EBITDA per SCM has been in the range of around 7 to 8 rupees. Would you be looking to maintain that, or would you lower it considering the FY25 number coming in below 5 rupees?
That 7 to 8 has always been our long-term guidance, that is the range that we feel more comfortable, and we always target that. But due to disruption in the third quarter, where it has the per SCM had gone down to 4.34. So we had given an immediate range of 6 to 7 as a first step, and then 7 to 8 subsequently. Because any price hike has to be a little calibrated, in the sense that in the consumer mind, it should not happen that the fuel is highly volatile. So keeping that in mind, plus the competitiveness with respect to the alternate fuels, the emerging fuels like EV, etc. So we take price hike just to offset the impact of any gas price increase. So one such hike we have taken in Delhi recently of ₹1, whereas in other GAs we were able to increase by 3 to 4 rupees, because they are, the neighboring GAs are at a very high level. So that has been so I can say that the guidance remains 7 to 8, but in 1 or 2 quarters, we may be in the range of 6 to 7.
All right. So the question is, will we see another price hike to maintain your guidance band of 7 to 8? Or, with 6 to 7, you're comfortable even at current prices, even though APM gas allocation is reduced?
The price hike, we always keep on reviewing the situation, and the situation is dynamic in the sense that it is dependent on too many factors. The exchange rate, international prices of Henry Hub, crude, etc., as well as the domestic allocation. So we keep on reviewing that, and the guidance that we have given 6 to 7 immediate for 1 or 2 quarters and 7 to 8, we try to maintain that, and that whatever has to be done, be it in the price hike front or be it in the sourcing front. Gas sourcing is the most critical component here. So in both the fronts, we keep on working and evaluating. But we want to remain competitive, not only with respect to the neighboring GAs, but with respect to the alternate fuels, petrol, diesel, as well as EV.
Now, on the volumes front, and in the fourth quarter, which was largely in line with expectations, but slightly below your exit rate guidance of 9.5 MMSCMD. Now, what would be the guidance on this front in FY26?
So this year, our exit has been at around 9.2, closer to 9.2 in the fourth quarter. So next year, we are targeting 10 million volumes.
Any impact, if at all, if we can expect from the recent draft policy translated to, or rather related to the transition from CNG to EV, especially for 3-wheelers and 2-wheelers?
Firstly, the 2-wheeler is just started, out of, you can say, closer to 1 crore registered vehicles on Vahan portal. Only CNG 2-wheelers are only 3,000 in number. And 3-wheeler autos are around 1 lakh in Delhi. Delhi registered are around 1 lakh. So you can see the difference that the two-wheelers total number on Mahan portal is around 97, 98 lakhs, three-wheelers at 1 lakh. So the impact of three-wheelers was not there, but we have made our submission to Delhi government on the draft policy that the natural gas remains a transition fuel. It's the cleanest fossil fuel. And it was brought in Delhi just to take care of the liquid and solid fuels that were being used. Like it replaced the thermal plant was replaced with gas, then petrol and diesel vehicles were converted to gas. So our submission has been that it should remain a transition fuel, separate from the other two fuels. And it is much closer to the EV in the sense that if we use electricity today, that is not completely green. So that's around 75 to 78% based on fossil fuel. So if we compare that with gas, so gas is already giving you an advantage of 20 to 30% as compared to petrol and diesel. So it is much more closer to the electric vehicle space. And the pollution, now the numbers that I have given for two-wheelers and three-wheelers, the two-wheelers are too much in number and they are all running on petrol. So that has been our submission that they may relook at these numbers and then decide and leave the choice to the consumers, the user of the vehicle or fleet operator, that whichever is more economical, India should go for that. Yes, I agree that the tailpipe emission in electric three-wheelers would be less. But if you look at the entire life cycle carbon emission, so that is a debatable issue that how much benefit would be there in EV.
Sir, for joining in and giving us your perspective on your business and the regulatory framework as well as the outlook for the industry at large, EV versus gas versus fossil fuel. That debate continues, but you're saying gas is better placed in that. You seem to have been bringing good luck for the market. A 300-point uptick is what we've seen on the Nifty. Now at the high point of trade, 24,350, very close to the previous week's high of 24,389 is what you've seen on the index. All through the day, we've seen some strong support coming from the Nifty, Bank and Reliance. But keep an eye out on IT. IT was absent in this pack and now it's recovering from the lows. So can the second half mean another rally and a three-pronged attack on bears from the bulls? IT stocks recovering from the lows, currently just below the flat line. Pull up the intraday chart of Infosys. That's a near 1% recovery from lows. So we've done well for the Nifty, Bank and Reliance. IT, which was underperforming, now likely to outperform. And if that were to happen, then who's to say the Nifty, will it see a further uptick or not in the second half? We take a short break, come back, getting more on the markets and a lot of other stock-specific action.